Hello and welcome to Financial Detox, our live edition today. I'm Jason Labrum, your host in studio with my man, Alex Klingen-Smith. Alex, here we go for our first live. I guess we're going live, Financial Detox, streaming on all sorts of social media. What do you say, bud?
Oh man, I just know that I practiced the commercial yesterday. I'm so glad they took it down off of YouTube soon after because it was tough. Going live feels different.
What, a commercial? What do you mean commercial?
For this, like a commercial for what we're doing right now.
Oh, you made a commercial?
Yeah,
We have commercials?
I was voluntold to. Yeah, it
Sounds very professional.
Temporary ones, temporary commercials.
Unbelievable. Well, we have commercials now. We're going live. So Financial Detox has been a long-standing consumer education brand that spun out of our wealth management firm called IDA Wealth. And what happened is we decided we got to give a little bit back, and we want to expose the information that we have, the knowledge we've garnered over the years to a broader audience. So we, what was born was Financial Detox. Also in me trying to decide the topic or not the topic, but the title of a book that I wrote in 2018, which ended up being Financial Detox. So I guess that really was the true origin, right, Alex? Was the book then turned into the show?
I actually watched a video. I was looking at our YouTube last night after reflecting on my terrible commercial. And I watched one of our, I think it was the first YouTube video ever done on this topic. And it was you standing in probably like a hotel. We were doing one of those live events where a bunch of our clients and prospective clients came, and you were talking about Financial Detox and what is this? Why are we doing this? Why is it different than our core business that does wealth management, a boutique wealth management services for so many clients? And you talked about the toxicity of the information, the way that people kind of consume information, and like the way that the industry used to be when brokers were a thing and now we're advisors and fiduciary. And it was really like, it reminded me, I'm like, oh, that's what this started as, is that trying to help people understand what to pay attention to and what not to pay attention to, and then what to do with the information that they do process, and where an advisor fits in, and how we can help people have better outcomes. Right.
Yeah, and we'll hit on, at different times, we'll hit on specific topics, so whether it be Roth conversions, we'll talk about different strategies with your Social Security. A lot of time, though, we play, I guess that's a little bit upstream, and most people know Dave Ramsey, who does a phenomenal job with educating investors and people to save their first money, or to get their first $1,000 saved, pay off their debt, get their credit, that kind of really elementary or ground level financial steps. I think he even calls them the baby steps. And they're so important for masses of people, right, in America, because there's some really scary numbers when you look at the average savings in Americans' accounts. So Dave Ramsey, so critical for the work he does, and he does a great job with it. And he's a great personality and all that. I think where we step in at Financial Detox is most of the time the people we're talking to have money. All right, they have an account, they have money saved, they have investment accounts, but then it gets like down to the finite details of how do you invest that money? What do you do with it? How do you really protect your wealth? How do you get access to investments you maybe otherwise don't have, or that traditional advisors aren't bringing you access to particular investments? We talk a lot about that, right? Alternatives, running custom index strategies with sophisticated tax loss harvesting so you can keep more of what you earn. And that's where Financial Detox comes in. I without sounding braggadocious or ostentatious, it's a more sophisticated, or for an investor who has money, a lot of business
more
owners
money, more problems, right? I mean, what was that? What song was that? Well, I think it's fun too.
What do you got, producer Brian?
More money,
more problems. What is that?
We try to keep it fun.
Copyright struck. Notorious B.I.G.
Hey, there we go.
There we go. Yeah.
Nice, he got it.
Okay, that's all we can play on YouTube.
That's it. No copyrights.
I think we try to keep it fun and light too, that we really are just human beings that really care about our clients and our employees, our people here at IDA. And then keeping it real, like relevant, like what's going on in the world today. What do you do with that information? Like what emotions are useful, and what emotions are completely the wrong kind of ways to feel about investing, right?
All right, well, we better start talking about what we're going to actually talk about today, because there's a lot going on. Here we are. Can you believe January's over already? It's January 30th. I don't understand the time lapse, right? When you're younger and people say, who are older, they say when you get older, time goes by faster. It's no joke. I mean, it's crazy. So we're already through a month of the year. We have a new administration. We have a new president. We have new AI out in the world. The DeepSeek is after trying to come after some of the US-based AI. Artificial intelligence is real. It's here to stay. I think it's as big of an event, if not bigger, than the internet. So how are you going to get your money invested in something if you knew the internet was starting right now and you go back to the beginning days of that? What would you do? So we'll talk a little bit about that. We'll talk about the administration tax strategies that we think, NVIDIA and the big meltdown we had. I think it was it Monday? There was a Friday. It was Monday.
Yeah.
So we can talk a little bit about that. And then in the end, we'll package it all up with some hopefully actionable advice for you to take with your portfolio. And so you can make better investment decisions.
Us questions too. The point of this being live is that I know that we have some people helping us out behind the scenes that are going to be feeding the questions to us so we can address them real time for you. So don't be shy. We'll try to answer anything you throw at us, except for, music trivia apparently, but
we're not that good at that. We're not that good at that. I mean, maybe country music
Brian
would
is.
be all right. Brian, thank goodness we have Brian. Producer Brian can make things happen for us. So that's good. Well, let's talk first about administration, right? There's 50%-ish, a little more than 50% of the people in the United States are pretty happy about what happened in the administrative change as represented by the just numbers at the voting booth. There's some people who are really not happy and really fearful and think that this is a bad thing and that, oh my gosh, things are going to happen. We've had more executive orders signed by Trump in his initial days than any other president ever. I think the number was 9 before was the most. And I think he signed 29. Gosh, I wish I knew that number exactly. Maybe our producer team can pull us up that specific number. But he went to work trying to fulfill his campaign promise. Like it or not, some of the things that are happening, we're going to probably be looking at extending the Tax Cuts and Jobs Act of 2017, which lowered taxes for most middle-income Americans. It did, in fact, despite what some of the traditional media channels will tell you, it raised taxes for most high-income earners. Yes, that's true. Trump raised taxes for most high-income earners and lowered taxes for most Americans. There's a lot of reasons why you'd want to see those cuts extended because, again, it lowered the tax brackets, which helped most middle-income Americans. And it also lowered the corporate tax rate, which was a gigantic boom for money coming back to the United States from companies that operate overseas and are U.S.-based. And there's also a really big one if you have created a lot of wealth on estate tax, because the estate tax exemption was increased to the largest number that's ever been, which is about 13 million for rounding out sakes per person can pass out without paying a death tax and estate tax. So think about that, right? We pay income tax on the income earned. We pay sales tax on almost everything we buy. We pay property tax on the homes we own. And then if you have more than a certain amount of money when you die, you just give up about 50% of it. Seems kind of like stealing in a way. So, but maybe somebody's for that. I think most people who have that amount of money are not proponents of a big estate or death tax. So that is going to potentially be extended too. Those are kind of the big things besides securing the border. Obviously, we've already started deporting criminals and violent criminals in the country. I don't know how anybody could be opposed to that, not being political and staying kind of down the middle of the fairway here, because I think I see both sides. But I don't know how anybody could be opposed to taking people who snuck into the country illegally and deported them out and getting them out of the country who've committed violent crimes. So that's going on, right? Trying to secure the border. What else? I'll pause there, and Alex, see if you want to add in, because that was a heck of a monologue.
No, that's okay. That you're the informed one on this stuff. I've been reading about it, learning about it, like everybody else, trying to keep up with. I mean, if it is close to 29, that's an enormous amount of immediate decisions made. As he was kind of doing them, that day on January 20th when he was inaugurated, I had to watch it later at one of my daughter's soccer games because I couldn't. I think I was at work during the time, so I was like, well, I should probably be working while I'm at work, not watching anything else.
That's good, dude.
Yeah, you know, good work ethic here. We try to maintain for our clients, right? But a lot of them really excited me, putting myself in the shoes, especially of our ideal client, right? We have a lot of different kinds of clients. And like Jason said, from many different spectrums of the political spectrum, but also of the wealth spectrum. You know, we serve people that are ultra high net worth families, you know, multi-generational families, foundation level families, all the way down to people that are a little more, it's just more simple, right? And they don't, it maybe they do have the need, they need what we do and they do value what we do, but it's not like this crazy, you know, complicated multiple trusts and estate tax issues kind of thing. But if I think about kind of like sort of the middle or the core of what we do as a company and what we spend most of our day doing all day, every day with the people that work here at IDA, if I'm a small business owner, if I, you know, I have maybe an employee or two or maybe a few, and I've been kind of waiting to see who was going to be in office, like I'm relieved probably, even if emotionally I don't like some of the stuff and it makes me mad. He's not a friendly person, Trump, you know. I don't think he's friendly, by the way, but he's effective. He's efficient. He's also, in my mind, as this business owner mindset, he's pretty predictable. He cares about businesses and he's willing to make decisions that show that, not just talk about it, but lowering the corporate tax rate. If I'm a business owner, now I'm like, oh, I have extra money I wasn't counting on because I didn't think it was going to happen maybe, but now I have extra money to do what with? I'm either going to take it myself as the business owner and spend it in the economy probably, or I'm going to invest it back in the business, which means I'm going to employ more people or produce more services or goods. All those things, by the way, mean good things for this country. So emotions aside, those are good things for the economy of the US, period. Factually, I don't know anybody that could debate that better than the two of us, Jason, right? Those, as a business owner, I'm relieved. If I'm a wealthy person, like you pointed out, just kind of hitting those points you hit, worth more than I think it's 13.99 million now. So 14 million per person. If you're married, it's 28 million. Some people think that's a huge amount of money, but if you live anywhere in the coastal cities of this country in the past 5 years, your real estate's doubled in value. You didn't even think it was a problem. If somebody happened to die this year and those things didn't get enacted and those numbers dropped from 14 per person to what was it before? Like, let's say 5. So you're 28.
It's set to sunset back to 5, but Biden was proposing that we take it to 2.5 per person. So if a family had more than 5 million total assets, then anything above 5 million would have been cut in half, and half goes to the government for no reason other than another additional tax or confiscation of personal property.
And on the whole spectrum of clients and people maybe listening, hopefully, like you're like, oh, boo-hoo, you're worth more than 28 million. Who cares? Well, but what if that was 3 or 4 generations of building businesses and saving and investing and being disciplined and like passing down values and legacy, to have the government make a decision that, oh, we just changed the rules. Now because the person someone has to die, right? The last surviving spouse has to pass away, assuming no estate planning was really done of the trust type that we work with clients on. That's a big number to say, oh, we just don't have that anymore. So the whole family, too bad. And then we're going to take that money in taxes and decide how to spend that money in the government, right?
Well, the question I think that it really comes down to is who's better to hold that money long term? Is it a family that builds businesses and hires people and gives to charity? You know, America is the most philanthropic country in the world by such a huge measure. It's unbelievable. It's really unique to American, our philanthropy. And typically people who have that much money are philanthropic and give money away. So who's better to have it? The government? Are they going to do better with our money? Or will we as humans and citizens of this great country do better with our money? And I think I basically forecasted and foreshadowed my thoughts on that. But so I want to give you some specifics. There was 24 executive orders signed on inauguration and here right after. So I can hit a couple of those real quick. The big ones are immigration, an executive order directing the use of Guantanamo Bay facility to detain up to 30,000 individuals accused of immigration violations. Education orders aimed at reforming education by ending what is termed indoctrination in K through 12 schools, addressing anti-Semitism on college campuses and promoting school choice. Military policy, an order banning transgender individuals from serving in the U.S. military, citing concerns over unit cohesion and military readiness, and other environmental agreements, including withdrawing from the Paris Accord and such. So I mean, regardless of what you think, the man is busy and he's getting some things done. You know what's funny is one of the podcasts that I listen to regularly, Alex, we talk about it. And it's just a great podcast from an education standpoint, is the All In podcast. And there's 4 or 5 besties members of it. You have a Chamath, Jason, David Sachs, David Freeberg. And these guys love their podcast. So shout out to you guys for doing such a great job. Really smart individuals, right? And there's liberal leaning. Jason is very liberal on there. And you get David Sachs, who's very conservative. And you have kind of Chamath and the Sultan of Science, David, who are more in the middle of the road. But it's really fun to listen to them talk. And everybody says, I hate Trump or hate Trump. Even Jason, who's the very left leaning, he says he's a centrist, but he's very left. And he's smart and he has some good points. But even Jason's met and spent time with Trump, and it was hard for him to deny that he was actually quite kind and likable in person. When you extract what the media has done to him, all the mainstream media and how they portray him with sound bites, that he's actually quite likable. Same thing with Chamath and these other guys who I think are very independent thinkers. These are billionaires who've created great tech companies and or investment funds and have done a phenomenal job. So I think it's important that we get back to kind of what we always do on Financial Detox, which is if you take real issues that matter and you line them up on a sheet and you say, let's talk about issues only, not the people, and facts only, most of America agrees. And the large portion of America would come to the center and would be 70 to maybe 80%, I would argue, would agree on almost everything. And then you would have 10 or 15% of wacky doodles out on each end. So that's what we're kind of a proponent of, trying to not only talk about finance and money, but also get people to think clearly, because so many times we have seen lately politics over the last 5 or 10 years have really influenced how people even invest and oftentimes really messed up a good investment philosophy because they're so wound up politically. And we're wound up politically because we get into these confirmation bias echo chambers of social media, where what you hear and what you like and what you want to see, you see more of and more of and more of, and nothing of the opposite. So it becomes hard to imagine how anybody could even think differently when you're just being fed confirmation bias. Really scary situation. We as Americans and listeners of this show and ourselves, we have to be smarter than that and pull our heads out and talk and have conversations about real issues and say, let's talk about this. Tell me why you feel the way you feel. Like, what facts do you have? What data do you have? Not, I don't like him, he's got orange skin, he's the orange mean man, mean tweets, or I don't like her, she's whatever. You can't do that. You got to talk about real issues.
So I want to talk about AI, and I want to hear about how we're starting to think about this more seriously. It's funny, like I went to like 5 of these conferences last year with private alternatives and private investments, and even some of the bigger ones that are put on by some of our bigger partners that are, huge behemoths in the industry for finance and thought leadership. And AI was everything they talked about last year, and maybe even the year before. I just didn't go the year before. And now, like, thinking intelligently about an investor, if it's that same business owner investor who has a family and cares about what he does or she does in their business, am I investing in AI intentionally? Am I investing in AI just through the Magnificent Seven and all the other big companies that are using AI and investing in AI through their own kind of M&A, vehicles? Or like, what do people do with this information? Like, you have a Chinese company that just all of a sudden no one's heard of until Sunday or Monday. Right. NVIDIA loses $600 billion in market value in one day. The other competitors lose another $300 billion. That's almost $1 trillion because one no-name company comes out of nowhere. Like, what does that mean for investors? Like, that one piece of the puzzle, and maybe even correlate it to Trump and what he has talked about doing with crypto and deregulation and business, but how he feels about China. Like, there's a lot of confusing intersects there, right?
There is, and it's so complex, right? It's just so complex. But the DeepSeek and what happened there, it's interesting because I did some research on DeepSeek. I mean, it's a China-based artificial intelligence company that before you use, I downloaded the app and then I did not end up
We talked about this, Jason.
I know. I had to get prepared, right? So
of all the people, I couldn't imagine.
I downloaded it. Look, hey, I wanted to see how it works versus I use Gemini and I also use ChatGPT and all the different versions of ChatGPT, which was actually very interesting because I was using ChatGPT for a question even running just barely while we were on the show. I used ChatGPT to look up how many executive orders Trump signed. And I should
have used that, damn it.
Yeah, come on, producers, man. Where were you on that one? That's slow on the draw.
Embrace the AI, embrace it. It's coming, Brian. It's here, actually.
I mean, really. But here's the trick, right? So ChatGPT has 4 versions now, and I subscribe so I can use whatever version. There's a 4.0 for most questions. There's a 4.0 with scheduled tasks, so you can kind of schedule things. Pretty cool. There's 0.1, and then there's 0.1 mini. 0.1 uses advanced reasoning. When I put in the question, how many executive orders did Trump sign in 2025? 0.1, the most sophisticated advanced reasoning, told me as of this writing, Donald Trump is not serving as president in 2025. Like, this is the most advanced AI in the country. This just happened right now. Like, I'm looking at it, and if you can see my eyes moving around, it's because
they must not have updated it yet this month.
Well, but I mean, that's crazy. So then I went over to the 4.0, which is the less sophisticated, and I put in the same question, just curious, because you get the answers way faster without the reasoning, and it gave me all the great data that I read off earlier.
Yeah.
So when I downloaded the DeepSeek to check it out, and I did some research before I downloaded it, and it said you will be required to accept the terms and permissions, or the terms.
All your stuff's going to China, man.
and that's where I didn't, because I actually opened up the terms and started reading them, and it was like reading a legal document. But it became very clear to me that they were going to use my data in ways I would not want them to.
Of course, and the government of China can seize it at any time, right? That's the whole point of why we don't.
It's not good. So I just went, holy cow, this is going to be fun to talk about on our show. I would not use DeepSeek. So, but this is how markets react, right? And this is where there are still some inefficiencies in investing, because things get temporarily mispriced. Sometimes the pendulum and the emotion drags the markets one way or another a little bit more than they should. But like, you look at what happened to NVIDIA on Monday, and this, you had the numbers, huge decline in value. Was that even justified? I mean, are Americans really going to adopt DeepSeek and use it?
Well, what shocked me is that it should have been Microsoft that dropped in value, not NVIDIA. NVIDIA dropped in value because I think what they, and I've only read this for 2 or 3 days. This is brand new to me, probably to most people listening, hopefully, unless you're like really into AI more than me even, which is possible. But NVIDIA makes the chips. Yep. So DeepSeek figured out how to make this technology better than OpenAI's with less chips and more efficient. So they're like, we don't need NVIDIA anymore. It's like the supplier no longer needed, their price comes down because supply and demand, right? Yeah. Now, why did Microsoft go down if there's a new competitor? That's what's really interesting. And this is where the investment, I love, Jason, how you make decisions about investments for our investment committee, or with the investment committee, I should say, because you logically can think through, like, who are the main competitors with AI right now? You got Microsoft, now you got DeepSeek, which you can't buy anyways. It's a private Chinese company, but there's other publicly traded companies, Google, Meta, and they've all been raising their hands saying, we're really good at AI and we're just trying to figure out how to monetize it and blah, blah, blah. And some of it, and does any of it really work that well? Just kind of like when the internet came out. I mean, did any of it work that well in the beginning? No, not really. They were all still figuring out how to make it applicable within users' lives, and also how do you invest in it, right? That's the question you ask. Or should you even invest in it yet? And that's the answer. That's a question that people want answers to, right?
Yeah, and I think it's pretty simple. I think you should invest in AI. It's like investing in the internet. I really do think it's that big or bigger. Man, you made a good point though, Alex. It's clunky. Right now it's clunky. I mean, when I go to the most advanced AI on American soil, one of them, right? I mean, ChatGPT 1.0 is the deal. And I don't even get that Trump's in office. I mean, there's some major.
They could probably build you a computer program though, I bet.
Yeah, so there's things but I think the way it's going to work and the way people will monetize this, you and me and our clients and people who either do it themselves or they work with firms like ours, the way they're going to monetize this is owning the companies that really use AI to advance their business services or offering to clients, and or people who use AI to build new businesses. Just like in the internet, you never bought the internet. What was the internet? Well, it's the ticker symbol for I own the internet. It's not there, right? But what you did buy was originally AOL,
Yahoo, yeah.
Google, Yahoo, Amazon. You know, you look at all these companies that use the internet for their business model. That's where the money was made. And I think the same thing is going to happen with AI. Unfortunately, or fortunately, if you understand it, I think one of the paradigm shifts that have happened in the marketplace that changed the game, that changed everything, is this kind of big seven, big 10 companies. They've become so dominant through the growth of the internet and them being first to that major technological revolution that they created endless amounts of cash flow, and they have buying power that is beyond measure. There was over 500, I think the number's even 7, but I'm just going to go with over 500 transactions completed by the top 10 S&P 500 companies. So your NVIDIAs and your Googles and your Amazons and Microsofts, and they've made over 500 acquisitions of other businesses. They're basically private equity firms. They're buying up all the new innovation and new technology because they have the cash to do it. So that is a place that you have to have exposure in your portfolio. It's performed unbelievably well, and there's probably going to be a day of reckoning or a reset. There always is.
Monday was a good example, right? I mean, that was
but there's going to be a real reset, not
like
these 1 day, 1 month resets. There just has to be. Even right now, what we're hearing more and more is clients are saying, man, I don't want to be so conservative. This is happening to me almost daily.
Yes.
They were conservative because they didn't like volatility. They didn't want risk. They didn't even need the higher rate of return.
Yep.
So they said, I'm conservative. I'm a 5 to 6% rate of return. 7's going to make me happy. But now they see the market 2 years in a row, at least the last 2 years, equities have done between 20 and 30%, 2 years in a row.
Yeah.
And now they're saying, yeah, I don't think I want to be conservative. I want to go get that return. And that is the most classic.
Well, our memory doesn't go back
blunder.
3 whole years, man. You can't remember 2022. That was too long ago. Like that.
2022 when the markets were down and when bonds were down, and it was not fun, but it was so short, Alex. Like the time.
It was a long year for me. I remember it pretty well. It was not that much fun.
But that hit was short. I mean, you got to live through 2000, 2001, 2002, or you got to live through 2008, the whole year down 30 something percent, and then down another 20% to start 2009 before it recovered.
Tie it into crypto now. So keep going. And I know we don't have forever on this show today, but so you go into crypto now. I was sitting with Nolan, one of our young up and coming, awesome, works on our tax team, you know, was learning, doing financial planning, working with clients already. And him and I were sitting at a bar in Newport Beach at a conference that evening. It was at the same hotel bar. We were sitting with the people that work for Bitwise. They were there talking about crypto, and their Bitwise is the 4th largest ETF company for Bitcoin and crypto and Ethereum. And that's when Bitcoin hit 100,000. And they were excited. They were like buying drinks for everybody. And I'm like, what? I didn't even know, by the way, because you know how I am with this kind of stuff usually. I'm like, why does that matter? And they're like, well, it's a milestone that we, you know, if Bitcoin can do it, it's just a huge market now. It's like a how many $1 trillion market, crypto, right, in itself, or Bitcoin by itself, I think even. Is it real? Is it part of a portfolio? Is it sustainable long-term? Is it a real asset class people should be seriously considering for their overall long-term strategy?
Yeah, Bitcoin trading at 105 today, 105,000. Remember when it went to 65 and then it went back down to 12?
You and I made a bet. Remember at the beginning of 2021
Did I win
or something? I don't remember our bets because neither one of us really have any data to support.
We got to write down these bets.
I think we did it with, anyways. Yeah, I don't remember, but now it's way more than back then. I would think it was like 20,000. So now
we did. That was like on our starting show in 2024. We should look up our financial.
I bought it.
Shows.
I bought it on PayPal and Venmo just to track it. So I guess I can.
Why not Coinbase? Coinbase is where most people buy it.
Well, because I was too lazy to download another app. I had Venmo and.
So look, Bitcoin's interesting, and what on a finger off of that, you look at what Trump did with this meme coin. Now that I just don't get. I don't understand it. Created billions of dollars of value on purely nothing, like selling like a collectible. It's just a collectible thing to say you bought. Now, some people made money who got in early. I think most people will lose a lot of money on that. It's weird as could be. Bitcoin is the juggernaut, right? Bitcoin is the store of value. It is the alternative to gold or the US dollar, where conceivably it could be a place to store value and protect it. And I think it's extremely beneficial for people who otherwise don't have access to safe banking, safe credit and stuff. And that's third world countries, right? In America, we're lucky. We can go to a bank and we can buy a CD and we can know with almost 100% assurance that money is going to be there. If we have a CD, it's FDIC insured. We buy U.S. treasuries. They're backed by the full faith and credit of the U.S. government. There's a lot of safety and security and options for us to preserve our money. Now, the currency is radically manipulated by the government and printing, so that's a problem. And I think that's what Bitcoin addresses in a way that is meaningful. And once you deregulate it so you can use it, hopefully regulate out any criminal activity with it, but yet still allow it to be a functional medium of exchange or a medium of storing value, then it's a pretty cool tool. The blockchain.
That's been happening, right? I mean, that's where I literally became comfortable was when BlackRock and a few others started creating these ETFs because the deregulation came down enough where the big banks finally stopped resisting it and said, oh, we'll just do what we always do and make money off of it, right? Okay, if they're making money off of it through investors, then I think our fiduciary responsibility is to really understand, does it have a place? Does it have a use? And at what incremental level? And is it a thing we force upon clients through discretionary management, or is it like an optional, if you have an appetite for AI and crypto or either or, we would like to help you steward it responsibly versus just what I did, which is buying it on, Venmo or whatever.
Well, there's a way too. And I've actually recommended to clients, hey, just take 1% of your investable assets and buy Bitcoin on just in case. I mean, just if not, it's a guess that this could be great. And I was fortunate and bought it early. I have a friend who's very much into, shout out Tom, very much into this and has been on the forefront in the development of it. And he's always been a proponent saying it'll hit 100,000, it'll hit 100,000. Now he's saying it's going to hit a lot higher. So will it? Who knows? There's no guarantee in any of this. I do know that the one guarantee is that if I have a well-diversified portfolio, and I own lots of different companies that do different things in different sectors, and I buy companies in that portfolio that have good fundamental characteristics, and I pay attention to that, I do know that over time you're going to create wealth with that portfolio because companies are going to grow. They're going to find new ways to profit. They're going to be innovative. They're going to use AI. They're going to use blockchain technology. They may use Bitcoin themselves. So you'll thrive and you're almost, I can't say the word guarantee, I don't think in anything, but you are virtually or very close to guaranteeing your success, especially if you allow time to work. The challenge is, how do you do that to optimize it, right? How do you invest in a way that optimize it with tax efficiency? We talk about all the time, tax sensitive asset location, tolerance band rebalancing. We talk about owning custom indexes for tax efficiency and tax loss harvesting. So there's ways to do that can potentially equate to 1, 2, 3, 4% better returns in your portfolio over time. And those are astronomical numbers when compounded for a couple decades.
That's why people hire us, because it's like anything else in life. If you really want to get really good at something and it becomes really meaningful to you, the stakes get higher. You either become an expert at it yourself or you hire an expert. Right. You don't think you're an expert and then not do it the right way, because then you're only hurting yourself with your health, with your family, with your relationships, with your money, right?
It's funny I was thinking, as you said that, back to some of the client testimonials that are out on our YouTube and different things that clients talking about the way we've impacted them. And so we have some of the smartest darn clients. I mean, engineers, brilliant business people, doctors, lawyers. I mean, we have really smart clients. I would argue a large swath of them are smarter than me. However, they don't do this every single day, all day, and study this and research it. And so many times in those testimonials, it was like, man, I just needed to get organized. I needed to know where everything was. I needed to know how it worked together. And then I needed to somebody to watch it every single day and pay attention to what's going on, because I could, but it's not what I do. And so we fortunately earned their business through that method, not because they hired us because we're so unbelievably brilliant. Although I think we're pretty smart when you put the collective knowledge of our team together and all the resources we have. But it's it's not a crystal ball scenario. It's a process and philosophy.
There's one topic we have to hit before we start to close, but because I put it in the thing, and Christy's going to make me, she'll get mad if we don't actually hit it. But it's
Christy mad.
It's inflation, the Fed, interest rates, and Trump. Like bring those. Yeah, I don't think she can get mad, but the four things together, like inflation, the Fed, interest rates, and Trump. What's going to happen this year, Jason? What is my business owner friend going to do about these decisions, or any investor? Right? Does it matter to them if they just tune it out, or is there stuff you really should be doing this year to position yourself for how these might collide over the next year or two or four?
That's a good question. I think that we are in a position now where deregulation is a good thing for businesses. That's a good thing for stocks. That's a good thing for Americans in general, unless you want to be regulated and controlled. And if you do, China's great.
No, I don't want, no thanks.
But if you don't want to be over-regulated and over-controlled, the voice of the majority of American people was very loud and very resoundingly clear that they wanted less regulation. They wanted closed borders, protected borders. We want immigration. It's the greatest country in the world built because of immigration. We wanted lower inflation, less government spending, less government this, government that. We wanted to kind of get rid of the gender dysphoria that was being perpetrated upon children. And I mean, that was a very loud voice across the country. If some of the mainstream media is having a hard time accepting that, but that was the voice of the Americans. And I don't think that there's a dire situation ahead of us. I think if anything, the future looks significantly brighter and not
stay the course. Then don't make dramatic changes regarding interest rates and inflation and the Fed.
I don't think so. I think we're going to probably end up with a tough patch of time somewhere in the next 4 years where this correction, you can't correct things that are wrong. Massive government stimulus, printing money, giving money, free this, work from home. Nobody has to really work. Just pretend you're working. Tons of government money flowing. That coming off of that drug, so to speak, there's got to be pain.
Yeah.
If you talk about Doge and what's happening with cutting government waste, which would be really hard to argue, there's not a massive amount of government waste. If you start cutting that and you start cutting employees and unnecessary, unproductive employees out of the government, you could have a large unemployment situation, right? You're talking a big part of the U.S. economy is from government. So that's not a reason to keep it, I don't think. I think you have to take the pain. I think we have to cut spending. There has to be austerity measures. I don't know if there's anybody who has the political willpower to do it, but if anybody does, it's probably Trump, because he doesn't care if he's that liked. But he can do maybe he will do some of the tough things, but those could be painful. So, but with that comes, I think, potentially lower inflation, because if you do have excess government waste being cut and less government employees, people becoming unemployed. And then you also have artificial intelligence, which is taking jobs as we speak. There are companies that are using AI to do the jobs of other people or people they had previously. That also could create. So although there's so many technologically good things happening, that could also create some interim pain for adjustment. So the answer is, with your portfolio, I think you have to continue to be very thoughtful about how you build your portfolio from a strategic standpoint, not an emotional, politically news-driven standpoint, because those things never end up with good results.
I mean, it sounds like this is like a deja vu moment, probably from another show 5, 6, 7, 8 years ago, even the COVID times, early COVID at least, where we talked about how important it is really just to dive back into knowing what you own, why you own it, and then making sure you have a well built out financial plan built by experts that know the categories of a financial plan well, have studied them and have gotten their certifications to be able to master them. Yeah. And are still in the practice doing them so that they're current and live with the information going on, that care about it. And then have your portfolio match up with your financial plan, not the news's or your friends or your neighbors, like your actual financial plan. And then pay attention to it, come back to it every 3 to 6 months as things do change, right?
It's so personal, right? Money and wealth management is so personal, and it really depends on you, and it has to be crafted for you. So either you have to get personal with yourself and get real with yourself as you build out a portfolio and you start to understand financial concepts and strategies, or you got to get somebody who's going to do that with you and treat you with respect, with you in the best interest, taking you as a best interest. There's a big difference between working under a best interest contract and working with a fiduciary who's obligated to operate in your best interest. We have some great information on that on a show or online. You can check it out or give us a call, and we'll help you understand the difference. The large majority of advisors in this country operate under BIC best interest contract, which is like a suitability advisor. They have to do things that are kind of suitable and somewhat in your best interest, but they do not have to operate under a fiduciary obligation to serve your best interests all the time while disclosing all conflicts of interest and compensation. There's a big difference in that. Christy has some information on that, and I know we've put it out, but it does come down to understand financial concepts, Roth conversions. These things make sense. Having AI in your portfolio, making sure you have the right companies that are leading that, having probably some crypto mechanism in your portfolio, alternative investments like private equity, which has higher expected returns and lower expected volatility. If you're not building that into your portfolio today, especially after we've had this huge rise in equity and common publicly traded equities, you're probably going to get hurt pretty bad if you don't have the right portfolio structure put together. So that's what we love to do, is help you do that. And we do that through IDA, Wealth, and Financial Detox. And before we totally close, was there any immediate or burning? Did we get through all the questions? Did we answer them from producer team on the back end, or anything we need to address?
We are good.
We can wrap it. Awesome. Well,
yep.
this is the wrap on the first Financial Detox live show. Thank you for tuning in and checking us out. YouTube, Instagram, everywhere it's at. And IDA Wealth is where you can check us out. Thank you for tuning in. I'm Jason Labor.